Okay, let me explain about the some trading stuff. So basically, what I'm doing there, I will just recap about the gold, like that. Let's suppose right now gold is like that. This, then this. Wait, let me try it again. So what is to be there in the gold? Like currently you see there. So there is H1 time frame. If you go there, the gold is like that, and then like this, something like that. If you see the trend will be here like that, higher high, higher high, higher high, and you notices that RSI will be going down, and now we see there the break here and then going up. So then after this high marked, let's suppose this is divergence of their point. So what is the trader is going wrong there? Whenever his divergence is happen, so they start selling there. This is the biggest issues for the people. Don't sell it. So how did you sell? Let me tell you. Let's suppose this is the low. What is the recent low? This is the recent low. Okay, and this is the recent high. And what we need to do, you will be try to count how much pips it is moved there, right? So approximately, let's suppose 70% pips to be the move there. Like maybe you understand what I'm telling to do there. So if it is move 70, let's suppose if it is 100% total is lower to high. So basically lower high and then higher high. Okay, lower high. This is lower high because it's this is not exact low. This is lower high. So in this lower high and high, if you see there, the total is 100%. If you see the 70% will be lies here. So this 70% means that same point of the RSI divergence just count is the 70% on the top of there. If it is market this after divergence moving 70% like that, so then you will try to wait for the here what bearish engulfing candle. Once the bearish candle engulfing candle is occurred, means that confirmation that it need to sell. So then you will go to sell, and then you see the H1 time frame is going down after that. After that is going down, then you see there it is before breaking like that. If you draw the trend line bottom side, it is break there. Once it break and then go to retest on here, and then going down straight forward. And most of the cases, why it is big sell on 29th of December. So basically, the most of the user are the book their profit. That's the reason. That's a panic will be created, and that's the market will fall in down. Now, right now, market is running, I think here. Okay, so most of the cases, people are thinking that either is going up or down. So what should be scenario there? Okay, so how did you trade on this zone? So you see there the trade is already rejected on the 50% of the zone. Okay, so okay, now come to the point. So first of all, there is three factor we need to figure out before enter this trade to be here. First, you will be the, you know that very well, fundamental, technical, and sentimental. Okay. So if you go through the fundamental, so fundamental is saying like that it's depend upon the your like the news factor and what is the market is going on there. So that's the thing. Okay. So you can do that thing. After that, news. Once you check the news, either check on the news, either check on the Twitter. So after this thing, Twitter maybe sometime Trump will be the very impactive news that will be also impact on the gold and Bitcoin as well. So third part is that second part is that technical. So what is technical is saying here that according to technical, if you go through the technical, there is two things to be approached here. Let's suppose this market going down. In case if you draw the Fibonacci from top to bottom, let's suppose we have a top to bottom, I'm saying something like that. So so if you draw the Fibonacci from top to bottom, So so what I'm telling to you, that after that, if you see here, uh technical, like that, I'm come to the point. Technical, so technical is basically here that, so it will be the two things to be, if you draw the Fibonacci higher point to the lower point, if it is get the 17.5 of the Fibonacci, if it is rejected like that weak on the 17.5, so then you take the buy trade on here. Okay, 17.5, I'm selling word 17.5. Maybe my word is not clear, just try to listen to me. So after this rejection is going like that, one candle will be rejected like that, so you will just put the 17.5 is a SL and then take the trade, and let's see what happens. Try to follow the H1 time frame, in case there are rejection to be here. If it is not rejected here, so what we need to do, you will be wait for the next zone. So use the new indicator, I think so, you know that, daily pivot and resistance and support area. So you need to figure out, don't use the simple pivot, you to use Fibonacci pivot. Okay, Fibonacci pivot, why I'm using the Fibonacci pivot, because once the gold is break, so they will very fastly going down. Once the gold is going up, so then break, then go up very fastly. So that's the reason we will figure out the using Fibonacci pivot. Okay, so in that condition, you will be wait for the next Fibonacci zone, either your next resistance level and the next resistance level. In the next resistance level is something rejection on the week, something like that, either bullish engulfing candle to be occurred. So then once the bullish candle is occurred, after that this candle will little bit going down of the 20% of this candle, then you take the buy trade here, and this is the way. Maybe I will be messed up all the graph here, but I hope you understand this video. This is the way you can make, because yesterday I have traded just for a testing purpose. I have traded, I think that's amount is $3,500, and now I flip as $8,300. Okay, so this is only possible, this type of strategy I'm using something like that. Maybe you understand. This is basically this is the part of the practice. If you more practice, so you can very well understand. If you have any further questions, so you can just tell me that, maybe I will try to reply it. Otherwise, if in case of this time said sit on the trading setup, maybe I will not reply on that time. So so just comment on the video, maybe I just try to help you. Okay, thank you.